gold. So yeah, I mean, $50 wouldn't be too expensive, nor would 300 or anything in between. So as we see it move up little by little by little, yeah, it's long overdue. And I think there's a lot of road left to who expects silver to outperform and to appreciate as time goes on, as we get closer to the elections, get closer to the BRICS meetings. I expect to see more of this continue.
Michael Pinto, a veteran money manager and the brains behind Pinto Portfolio Strategies, is casting a spotlight on the shadow looming over the financial markets, a potential credit crisis that could unravel the fabric of our economic stability. The imminent end of the Bank Term Funding Program, coupled with the urgent need to refinance a massive pile of commercial loans at steeper interest rates, poses a grave threat. This scenario is further complicated by the existence of numerous zombie companies, barely surviving entities that could lead banks into a precarious situation due to an unprecedented rise in the cost of borrowing. Pinto's analysis doesn't stop there. He draws attention to the stock market's current valuation, asserting it is inflated by as much as 40%. As the artificial support from quantitative easing begins to fade and the Federal Reserve's balance sheet contracts, Pinto anticipates a liquidity crunch that could trigger a broad market correction. His foresight into these matters suggests that the economy is skating on thin ice, with significant adjustments on the horizon as we navigate towards a potentially turbulent financial future. Now, we'll show you more clips, but first, subscribe, enjoy the video.
From Brazil now and paying for it in yuan, which is immediately convertible into gold on the Shanghai Gold Exchange. At the same time, the BRICS now have just developed or are going to develop a BRICS grain exchange. And the BRICS grain exchange is a pushback to the fact that all of the global prices of these commodities are primarily settled on the Chicago Mercantile or the Commodity Exchange. And when you listen to what they're saying, they say the ministry insists that the BRICS countries are the largest grain producers and exporters, but have no leverage to influence the price of agricultural commodities critical for their food security. So what are they doing? They're building the BRICS grain exchange. So this is similar to what I'm about to bring up to you with what's going on with precious metals. But when you look at what they're doing, look, they bought the LME. They're going to warehouse metals that are listed on the LME in China. They're the biggest producers of half of the industrial metals and the rare earth metals and all of the precious metals, and they produce as much grain or more so than the West. These are the countries that are the ones producing and accumulating and appreciating the commodities for what they represent. And they have been subservient, really, to the Western price mechanism and the whims of the ups and the downs and the shorting and the sucking and the speculating and then smashing it down again, like we're seeing right here with the increase in the swap dealers' short position. It's annoying already, but if you take a step back and look at it for what it really is, I think there's a hell of an opportunity here. And let me just jump ahead. I know this isn't what you asked me, but because it fits like a hand in glove, and it's really very important.
I know you had a big scoop today, so
well, to me, it's one of the most important things that I could mention, and a lot of it I've been talking about, right? I've been saying for a long time that the Shanghai Gold Exchange or the Moscow Metals Exchange or the Exchange for Metals in Dubai at some point would take over for the fraudulent LBMA and the fraudulent COMEX, where exactly these kinds of things can happen. Where the price is controlled and or really representative of the futures price rather than the underlying commodity. It's the tail wagging the dog. So, there's been this talk about a new currency, and we talked about it for the last few years. And a lot of people were bummed out when they didn't come out with their currency in August in Johannesburg. And we've talked at length about how instead they've been trading in local currencies, just like Brazil paying or accepting yuan for their corn. Brazil is, after all, the second largest exporter of corn in the world, or producer of it. And so now they take yuan, and if they want to hold it, great, or maybe they convert it into gold on the Shanghai Gold Exchange and take possession of it, because gold is tier one, and gold has been accumulated by the central banks at a faster pace than ever. All of these things are coming together. We see that. So there's a man, there's a website that a news agency that I go to a lot. It's called TASS, TASS, and it's a it's a Russian news site. And actually, I find that it's on par in many cases with Zero Hedge. You get really good information that it's confirmed by the Western media, but usually several days later. In any case, they came out with an interview done by a man named Yuri Yushavkov, where he did admit everything that we've been talking about. He said that they're working on a new digital currency, right? And digital currency would be based off the technology of the project M-Bridge. And the M-Bridge is a technology, I think it was designed by China, by Singapore, and the United Arab Emirates. And it's a way for these countries to trade their digital currencies across border without using the SWIFT system. And they have done some trades recently using the M-Bridge. A couple of maybe it's called the Genesis trade, a few of the first trades.
In today's market news, silver price analysis, silver plunges to $24 after stubborn U.S. inflation report. Silver price falls vertically to $24 as sticky U.S. inflation allows the Fed to maintain a hawkish narrative. U.S. monthly headline and core inflation rose by 0.4% in February. On the other side, 10-year U.S. bond yields rally to 4.15% as hopes that Fed rate cut expectations would ease. Silver price plummets to $24.10 as the United States Bureau of Labor Statistics has reported that the consumer price index remains hot in February. Annual core CPI that strips off volatile food and energy prices grew at a higher pace of 3.8% against the consensus of 3.7%, but lower than 3.9% in January. In the same period, headline inflation rose at a higher pace of 3.2% against expectations and the former reading of 3.1%. The monthly headline and core inflation grew by 0.4%. Quick recap of silver technical analysis. Silver price faces selling pressure after testing the horizontal resistance plotted from the December 22nd high at 24.60. The overall trend is still bullish. However, a price correction move is expected before a fresh upside move. Is this dip a once-in-a-lifetime opportunity? Drop a comment, like, subscribe, and check our links in description for some massive bonuses. Let's get back into the video.
Basket of commodities. Now, we've been saying that forever. Why? Because Glazyev, the Russian finance minister, has been saying that for 3 years or nearly, and it made great sense. In fact, I think we were talking about this long before he came out and said that. It just became obvious when we saw the massive amount of central bank repatriation of gold and accumulation of it, its tier 1 revision. We knew that gold would have a footprint in something that was coming on the scene for a new system. Well, Glazyev confirmed it a couple years ago, and here we have it again. He said, yes, a basket of local currencies and a basket of commodities. Now, here's where it gets interesting, right? We have a digital currency using the Project M-Bridge technology, sidestepping the SWIFT system, backed in local currencies of the BRICS nations and commodities. Everything we have said fits that. But here is where it gets interesting. And I have said this. I've been begging people to understand that what is happening with the arbitrage on the Shanghai exchange, what is happening with the development of the Moscow exchange, what is happening around the globe is that they are aware of what we're doing. They are aware that we have been suppressing the markets for a long time to support the illusion of the strength of the bond market, the strength of the Western system. And I have argued for a long time they're using it against us. The jiu-jitsu move, I've said it a million times, using our leverage against us. Now listen to what this man had to say. He said, the second part is price. For the moment, price is determined by Western speculation. We produce these commodities, we consume them, but we do not have our own price mechanism, which will balance supply and demand. During the COVID pandemic, the price of oil fell to nearly zero. No, he's wrong there. It fell to negative $40 a barrel, which is ridiculous, right? That's what happens when the futures exchange can set the price for the underlying commodity. He says, it's impossible to make any strategic planning for economic development if you do not control prices of basic commodities. Price formation with this new currency should get rid of Western exchanges of commodities. That's exactly what they're doing. They're setting the infrastructure and building it methodically, base building, backfilling, methodically to when the stupid price of the West, like negative $40 per barrel of oil, or a price that can continue to be suppressed by the commercial banks who distort the real value, distort the supply demand fundamentals, distort and make the real price an illusion to support the agenda of the West. When no one is willing to deliver at those make-believe prices like that, they will flip the switch and say, you know what? Now we're really going to turn up the arbitrage on the Shanghai Exchange and the Moscow Exchange and the Dubai Exchange and all around the world. And here's what gold and silver are really priced at. And they know this. And they are using the Western suppression against us to drain the shelves. Look at India importing over 400 million ounces of silver. I don't know how much is in the total COMEX holdings. 200 and some million. It's almost double what is on COMEX, of which probably it's 10 times what is in the registered category. Those are the bars available for sale. These countries know what we're doing. They are beating us at our own game, and we're too stupid as a country and as a media with no journalistic integrity anywhere to sound the alarm. And we're going to wake up one day to a fact that the COMEX and the LBMA are exposed for what they are, a fractional manipulative scam. And that's why you see this slow, methodical accumulation over and over and over and over again. Buy the LME, get all the base metals, settle all of these contracts for grains. Oh, let's make a new grain exchange. So everything that we are doing, setting the prices for the commodities around the globe, they know it. And they're using it to their advantage to accumulate as much as possible before the last idiot will give it away at these make-believe prices. And when that happens, it all changes. It all changes very quickly. So to hear it coming out of the Russians saying, yeah, we know what's going on, and we're going to change that at some point, in essence, to get rid of the Western pricing mechanisms in soft commodities, in base metals, and in precious metals. They'll have all three covered. All the commodities, hard, soft, and precious, they will control the price. They will control the production. They will control the shipping lanes. It's all being done methodically, slowly, base building. And we're going to wake up one morning, not your listeners, not the people who I talk to, but the American public will wake up to find out that the shelves are bare and you can't get it. And the price that we quote is make believe anyway. So I think that was one of the most telling things that I have ever heard in the last 4 years related to the BRICS, that if you do not control the prices of these commodities, then it doesn't work. So this new system, price formation with this new currency, should get rid of the Western exchanges of commodities. Do you understand how big that is? I think it's huge. And again, base metals, they own the LME. They're doing it with soft commodities, and that's why they're doing the grain exchange, like corn, like wheat, like soybeans, and they're doing it with precious metals too. And it will all end badly, and they know it, and we don't. And that's the scariest part of all, Chris. And I think that's something that everyone needs to hear.
Well, I know what you mean, because you can see the different steps falling into place, obviously.
What do you think of today's episode? Do you agree with Andy Schectman? Do you trade any numismatics at all? Post in the comments section your silver price prediction for the end of 2024, and check this video because it's a perfect fit for you. I see you on the other side.